September 18th, 2025, 6:12 a.m., Seattle, Washington. I woke up to my phone vibrating with price alerts. Reddit stock had closed at $270.71 yesterday, and pre-market trading was showing unusual activity. I grabbed my phone, still half asleep, and opened my ETRADE account. My position: 3,289 shares of Reddit, RDDT, at an average cost of $270.58 per share. Total investment: $889,997.62. Current pre-market value: $893,405. I was up $3,407. Nothing spectacular, but I'd only been in the position for 18 hours. My thesis was simple, calculated, and, I believed, bulletproof. Reddit was the last major social media platform to go public in the AI era, and Wall Street was massively undervaluing its data goldmine. My name is Daniel Kovacs. I'm 37 years old, and until 3 weeks ago, I was a senior data scientist at Amazon Web Services, making $340,000 a year. I'd spent the last decade building machine learning models, analyzing user behavior patterns, and predicting market trends with algorithmic precision. I knew data. I understood platforms. I could read engagement metrics like other people read novels, and everything I knew told me Reddit was about to explode. Let me back up 2 months to explain how I got here, how a rational, analytical data scientist with a perfect track record of smart financial decisions ended up betting his entire life savings on a single stock. July 2025. I was attending a tech conference in San Francisco when I heard a presentation about Reddit's new AI-driven content recommendation system. The speaker was a former Reddit engineer who'd left to start his own company, and he was explaining how Reddit's algorithm was evolving to compete with TikTok and Instagram. Reddit has something no other platform has, he said. Authentic, text-based conversations spanning millions of niche communities. That's training data gold for large language models. Reddit isn't just a social network. It's the world's largest database of human conversation, organized by topic. Something clicked in my brain. I'd been thinking about Reddit as a social media company competing for attention with Facebook and Twitter. But this framing was different. Reddit wasn't competing with social networks. It was competing with Google and OpenAI for conversational AI dominance. I spent the next 3 weeks analyzing Reddit's financials, user metrics, and competitive positioning. The numbers were compelling. 500 million monthly active users, 100,000 plus active communities, 2 billion posts and comments annually. Engagement time increasing 15% year over year. Advertising revenue growing 35% annually. But more importantly, Reddit had just announced partnerships with 3 major AI companies to license their conversational data. Google had paid $60 million per year for API access. OpenAI had paid $40 million. Microsoft was in negotiations for a similar deal. Reddit was sitting on a data goldmine worth potentially billions, and the market was valuing them like a struggling social network. The stock was trading at $245 per share in early September. Most analysts had it rated hold with a 12-month price target of $270. Conservative. Boring. Missing the entire AI data licensing thesis. I ran my own financial models. Conservative scenario? Reddit's data licensing revenue could reach $500 million annually within 2 years, adding $8 per share in value. Base case scenario: $800 million in licensing revenue, adding $15 per share. Bull case scenario: Reddit becomes the preferred training data source for AI companies, generating $1.5 billion in licensing revenue, adding $30+ per share in value. At $245, Reddit stock was dramatically undervalued. I was convinced this was the opportunity of my career. There was just one problem. I didn't have much liquid capital. I had about $180,000 in savings, $320,000 in my 401k, and $200,000 in Amazon RSUs, restricted stock units, that would vest over the next year. I owned a condo worth about $650,000 with $280,000 remaining on the mortgage. On paper, I was worth about $1.07 million. But only $180,000 was immediately available to invest. That wasn't enough. Not for the opportunity I was seeing. Not for the asymmetric risk-reward I'd calculated. If I was right about Reddit, buying $180,000 worth of shares would make me maybe $50,000 to $100,000. Nice, but not life-changing. I needed to go bigger. On September 12, 2025, I made 3 decisions that would destroy my life. First, I cashed out my 401k early. After penalties and taxes, my $320,000 retirement account became $224,000 in liquid cash. Second, I sold all my Amazon RSUs. Even though they hadn't fully vested, Amazon had a program that let employees sell unvested shares at a 20% discount. I took the haircut and got $160,000 in cash. Third, I took out a home equity line of credit on my condo. With $370,000 in equity, the bank approved me for a $325,000 HELOC at 7.2% interest. Total liquid capital, $889,000. On September 17, 2025, Reddit stock was trading at $270.58. I bought 3,289 shares, investing literally every dollar I had. My girlfriend Sarah was horrified when I told her. "You put $900,000 into one stock?" she said, her voice rising with each word. "Daniel, that's not investing, that's gambling. What if you're wrong? What if something happens?" "I'm not wrong," I said, pulling up my spreadsheet. "Look at the numbers. Reddit's data licensing revenue alone could add $30 per share in value. The current price doesn't reflect that at all. Wall Street is missing it because they're stuck thinking about Reddit as social media instead of as AI infrastructure." "What if Wall Street is missing it because you're wrong about the thesis?" she asked. "What if the data licensing doesn't scale? What if AI companies build their own data sets? What if Reddit's user engagement drops?" "User engagement is growing," I countered. 15% year over year. And they just launched the new recommendation algorithm that's going to accelerate growth even more. This is the most asymmetric risk-reward opportunity I've seen in my career. Sarah looked at me for a long moment. Then she said, "I've watched you make smart decisions for 6 years. This doesn't feel like a smart decision. This feels like you've convinced yourself you can't be wrong." I didn't have a response to that. Or rather, I had too many responses. Defensiveness disguised as logic, arrogance disguised as confidence. So I said nothing, and Sarah dropped it. That was September 17th. Less than 24 hours later, I was sitting in bed looking at my $3,407 in paper gains and feeling vindicated. I spent that entire day, September 18th, monitoring Reddit's stock price. It opened at $271.15, climbed to $273.40 by midday, then settled back to $271.85 by close. I was up about $4,200. Nothing dramatic, just steady, boring appreciation that validated my thesis. I opened Reddit on my phone and scrolled through my favorite subreddits. r/investing was bullish on tech stocks. r/machine learning was discussing OpenAI's latest model. r/Wall Street bets was making memes about some pharmaceutical stock pump and dump. Everything seemed normal. The platform was bustling with activity, conversations flowing across thousands of communities, exactly the kind of authentic engagement that made Reddit's data valuable. I went to sleep that night feeling calm and confident. My analysis was sound. My position was solid. I just needed patience while the market caught up to the reality I'd already identified. Then came September 22nd. I was at a coffee shop working on my laptop. I'd taken a sabbatical from Amazon to focus on personal projects, which really meant obsessively monitor my Reddit stock position, when my phone exploded with notifications. Reddit stock was down 8% in early trading. I pulled up the news. There was a report from TechCrunch. Reddit user engagement drops 12% month over month following algorithm changes. My stomach clenched. I clicked through to read the full article. According to TechCrunch's analysis of Reddit's public traffic data, user engagement had dropped significantly since the new AI-powered recommendation algorithm launched in early September. Users were spending less time on the platform, posting fewer comments, and engagement metrics across major subreddits had declined. The article quoted several Reddit moderators and power users. "The new algorithm is pushing content I don't care about," said one moderator of r/technology. "It's trying to be TikTok, but Reddit users don't want that. We come here for community-driven content, not algorithmic feeds." "I've been on Reddit for 9 years," another user said. "The new recommendations are killing what made this platform special. It's showing me popular posts from communities I never joined, instead of deep conversations from my subscribed subreddits." The article concluded with a warning. If Reddit can't reverse the engagement decline, its advertising revenue and growth projections could be in jeopardy. I stared at the article, my coffee forgotten, feeling something cold settle in my chest. Reddit's stock had opened at $271.85 and was now at $249.47, down $22.38 in 2 hours. My portfolio value had dropped from $893,978 to $820,444. I'd lost $73,534 in one morning. My hands were shaking as I pulled up Reddit on my phone. I needed to see for myself if the engagement drop was real or just media exaggeration. I scrolled through my feed. The algorithm was definitely different. Instead of posts from subreddits I'd specifically subscribed to, I was seeing recommended for you posts from communities I'd never visited. The posts were popular and highly upvoted, but they felt generic. Mass appeal content instead of niche community discussions. I checked r/programming, one of my regular subreddits. The comment counts on recent posts were noticeably lower than usual. I checked er/data science. Same thing. I checked er/Seattle. Lower engagement across the board. The TechCrunch article was right. Reddit's algorithm change was backfiring. I did what any rational person would do. I told myself it was temporary. Algorithm changes always have adjustment periods. Users would adapt. Reddit's engineering team would iterate and improve the recommendations. This was a short-term setback, not a fundamental problem. The stock kept falling. $245, $238, $233. By September 25th, Reddit was trading at $229.14. I was down $136,514 from my entry price just 8 days ago. Sarah called me that evening. "I saw Reddit's stock price. Are you okay?" "It's temporary," I said, hearing the hollowness in my own voice. User engagement dips happen after algorithm changes. The platform is still fundamentally valuable. The AI data licensing thesis hasn't changed. "Daniel, you've lost over $100,000 in a week." "It's not a loss until I sell," I said, repeating the desperate mantra of every losing investor. The stock will recover when the market realizes the engagement dip is temporary. What if it's not temporary? What if this is the beginning of a real decline? "It's not," I said, with more confidence than I felt. "I know data, I know platforms, I know engagement patterns. This is a temporary adjustment period." But over the next 5 days, the data kept getting worse. September 26th. Another analytics report showed Reddit's daily active users had dropped 8% since the algorithm launch. September 27th. Several major subreddit moderators posted open letters criticizing the algorithm changes and threatening to go private in protest. September 28th. An analyst at Goldman Sachs downgraded Reddit from buy to hold, citing concerning engagement trends that could impact advertising revenue growth. September 30th. Reddit's CEO posted a blog entry defending the algorithm changes and promising iterative improvements based on user feedback. The post was ratioed into oblivion with angry comments. By October 1st, 2025, Reddit stock was trading at $202.60 per share. My portfolio value, $666,197.40. My total loss, $223,800.22. I'd lost 25% of my investment, $250,000, in exactly 2 weeks. I sat in my condo, staring at my laptop screen, trying to process what had happened. 2 weeks ago, I'd been confident, analytical, certain of my thesis. Now I was watching my entire life savings evaporate in real time because of an algorithm change I hadn't predicted and couldn't control. The worst part was the realization creeping into my consciousness. I'd been wrong. Not wrong about small details or timing, but fundamentally wrong about the core thesis. I'd assumed Reddit's value was in its data for AI training. But I'd ignored the fact that data is only valuable if the platform remains healthy and growing. If users leave, if engagement drops, if communities fracture, the data becomes less valuable, not more. I'd been so focused on the AI licensing revenue potential that I'd completely missed the platform risk. I'd thought like a data scientist analyzing static datasets, not like an investor evaluating dynamic, fragile ecosystems. And now I was paying the price. My phone buzzed. A text from my brother Michael. Saw Reddit is tanking. Please tell me you didn't put real money into that. I didn't respond. What could I say? Yes, I put literally all my money into it. Yes, I'm down $223,000 in 2 weeks. Yes, I might have destroyed my financial future because I was too arrogant to consider I could be wrong. Another notification. This one was from ETRADE. Margin call alert. Your account may be subject to liquidation if equity falls below maintenance requirements. I nearly dropped the phone. Margin call? I hadn't bought on margin. I'd used my own cash and the HELOC. Oh God. The HELOC. I pulled up my account details with shaking hands. The home equity line of credit I'd used to fund part of my purchase was technically a secured loan against my portfolio. If my account value fell below certain thresholds, ETRADE could force liquidation of my shares to protect the loan. I did the math frantically. My maintenance requirement was 30% of my portfolio value. At current prices, that was $199,859.22. I had $466,338.18 in excess equity. I was safe. For now. But if Reddit fell below $185 per share, I'd be below maintenance requirements. ETRADE could liquidate my entire position automatically. I'd be wiped out. Not just at a loss, completely wiped out. The weight of what I'd done finally hit me. I'd borrowed $325,000 against my home to buy stock. If Reddit kept falling, I'd lose not just my investment, but my home. I'd lose everything. I grabbed my laptop and started doing what I should have done weeks ago, looking for warning signs I'd missed, analyzing Reddit's actual platform health instead of just the AI licensing narrative. The data was damning. Reddit's mobile app ratings had dropped from 4.2 to 3.6 stars over the past 3 weeks. Negative reviews all cited the same issues. Bad recommendations, loss of community feel, forced mainstream content. Traffic analytics showed that power users, The 10% of users who generated 80% of content were spending 25% less time on the platform. Several major subreddits had lost significant subscriber counts. r/technology had lost 50,000 subscribers in September. r/gaming had lost 80,000. The engagement death spiral was real, and it was accelerating. I pulled up analyst reports, reading them with fresh eyes unclouded by confirmation bias. Goldman Sachs's downgrade wasn't just about engagement. They'd also noted that AI companies were increasingly building proprietary data sets rather than licensing external data. OpenAI's latest model used synthetic training data. Google was focusing on YouTube comments and search query data they already owned. The AI licensing thesis, the entire foundation of my investment, was built on sand. Reddit wasn't going to become an AI infrastructure company. It was just a social network with declining user engagement and an algorithm that was destroying what made it valuable in the first place. I'd been catastrophically wrong about everything. It was October 1st, 2025, 11:47 p.m. Reddit had closed at $202.60. I'd lost $223,800 in 14 days. And I had no idea that things were about to get so much worse. October 2nd, 2025. 4:37 a.m. Seattle, Washington. The previous section ended with me sitting at my laptop at 11:47 p.m. on October 1st, finally understanding I'd been catastrophically wrong about Reddit. I'd lost $223,800 in 14 days. What I didn't know, as I sat there in my condo, staring at the numbers, was that I was about to lose everything else in the next 15 days. I didn't sleep that night. I couldn't. Every time I closed my eyes, I saw numbers. $202.60. $185. The margin call threshold. The line between massive loss and total annihilation. At 4:37 a.m., I gave up trying to sleep and opened my laptop. Pre-market trading wouldn't start for another hour, but I needed to do something. I needed to feel like I had control. I pulled up Reddit and started reading. Not looking at stock discussions. I needed to understand what was actually happening on the platform. I needed to see if there was any chance the engagement crisis could reverse. The top post on r/all was titled, "I've been on Reddit for 11 years. Today I deleted my account." I clicked through. The post had 87,000 upvotes and 14,000 comments. The author described how the algorithm changes had destroyed their Reddit experience. Instead of thoughtful discussions in niche communities, they were being fed viral content from subreddits they'd never chosen to follow. The post ended with, "Reddit is trying to be TikTok." I already have TikTok. I came to Reddit because it wasn't TikTok. Goodbye. The comments were worse. Thousands of users saying the same thing, sharing their own frustrations, announcing their departures. Power users, people who'd been on Reddit for a decade, walking away. I clicked through to r/mod support, where subreddit moderators discussed platform issues. The sentiment was apocalyptic. Moderators were reporting 20 to 30% drops in daily activity across major communities. Some were threatening to go private in protest. Others were openly discussing migrating their communities to alternative platforms. This wasn't a temporary adjustment period. This was a platform death spiral. I checked the time. 5:15 a.m. Pre-market opened in 15 minutes. I pulled up ETRADE and watched the ticker. Reddit opened at $198.40. My portfolio value dropped to $652,385.60 before the market even officially opened. I was down $237,612.02, more than $250,000, gone. and we were still $6 away from my margin call threshold of $185 per share. I did the only thing I could think of. I started researching Reddit's next earnings call, desperate to find something, anything, that might reverse the trend. The call was scheduled for October 14th, 2 weeks away. Maybe management would announce plans to roll back the algorithm changes. Maybe they'd report that engagement was stabilizing. Maybe there was a path back. The market opened at 9:30 a.m. Reddit immediately dropped another 3%. By 10 a.m., it was trading at $192.35. I watched my portfolio value fall to $632,437.15, down $257,560.47. My phone rang. It was Sarah. "I'm coming over," she said. No greeting, no preamble. "You need to talk to someone who isn't your trading screen." She arrived 20 minutes later with coffee and bagels I couldn't eat. She sat down across from my desk and looked at my laptop screen showing the falling stock price. "How bad is it?" she asked quietly. "Bad," I said. "Really bad. Give me numbers." "I'm down $257,000. If the stock falls below 185, I'll get margin called and lose everything." Sarah closed her eyes. "Daniel, you need to sell, now, before it gets worse. It's already down 25%. If I sell now, I'm locking in a $250,000 loss. If you don't sell now, you might lose everything. That $7 cushion between the current price and your margin call? That could disappear in a day, in an hour. Or the stock could recover," I said desperately. "The earnings call is in 2 weeks. Management might announce changes. The market might be oversold. I can't sell at the bottom." "You're not at the bottom," Sarah said, her voice rising. "You're in free fall hoping to hit a ledge." "There is no ledge, Daniel. The platform is dying. You can see it yourself in those posts you were reading. Users are leaving. This isn't going to reverse." "You don't know that." "I know that you're about to lose your home," she shouted. "You took out a $325,000 loan against your condo to gamble on a stock. If you get margin called, you'll still owe that money. You'll have to sell your home to pay it back. You'll lose everything." I stared at her. I knew she was right. Logically, rationally, I knew the correct move was to sell immediately, take the massive loss, and preserve what I could. But I couldn't do it. Some broken part of my brain still believed I could wait it out, that selling now would mean accepting I'd destroyed my life for nothing. "I need to think," I said. Sarah stood up. "You need to act. But I can see you won't. So I'm going to say this once. When you lose everything, and you will lose everything if you keep going like this, don't come looking for me to save you. I tried to warn you, twice. I'm done watching you self-destruct." She left. I sat alone in my condo, watching Reddit continue to fall. By market close, it was at $189.73. $7 from my margin call threshold. My portfolio value, $623,838.97. Down $266,158.65. I'd lost more money in 1 month than most people earn in 5 years. That night, I did something I should have done weeks ago. I called my brother Michael. He was a financial advisor, conservative, risk-averse, the opposite of me in every way. I'd avoided talking to him because I knew what he'd say. "You need to sell," he said immediately when I explained my situation. "Tonight. Place a limit order to sell at market open tomorrow. Get out before the margin call. But the earnings call is in 12 days. If management announces, Daniel, listen to me. I've been doing this for 15 years. I've seen smart people, brilliant people, lose everything because they couldn't accept being wrong. You're $7 away from forced liquidation. That's not a margin of safety. That's a cliff edge. If I sell now, I lose $250,000. If you don't sell now, You lose $500,000 and you're home. Do the math. What's worse? I wanted to argue, but I couldn't. He was right. Sarah was right. Everyone was right except me. Okay, I said. I'll place the sell order tonight. I hung up. I opened E-Trade. I pulled up my position. 3,289 shares of Reddit at $189.73 per share. All I had to do was click Sell, type in the quantity, confirm the order. I stared at the button for 30 minutes. Then I closed the laptop without placing the order. I told myself I'd do it tomorrow. I told myself I'd wait to see how pre-market looked. I told myself I just needed one more day to think clearly. But really, I was just a gambler who couldn't walk away from the table. October 3rd, Reddit opened at $186.25, down another $3.48. I was now $11.65 away from margin call. October 4th, Reddit fell to $183.90. I was $1.10 away from forced liquidation. $1.10 between me and total ruin. I couldn't breathe. I sat at my desk, watching the stock price tick in real time. $183.85. $183.92. $183.88. Every fluctuation felt like a knife twist. At 2:15 p.m., my phone rang. Unknown number. I answered. Mr. Kovac? This is Jennifer from ETRADE Margin Department. I'm calling about your account ending in 4782. You're currently $892 above our maintenance requirement. If your account falls below maintenance by market close today, we'll be forced to initiate liquidation procedures tomorrow morning. I understand, I said, my voice hollow. I strongly recommend you add funds or reduce your position to increase your margin cushion. The market has been volatile and... I understand, I repeated. Thank you. I hung up. Add funds. What funds? I'd already invested everything I had. I couldn't add funds. My only option was to reduce my position, to sell. But I still couldn't do it. Some poisonous combination of hope and denial kept me frozen. The stock fluctuated for the rest of the day. At one point, it dropped to $183.20, and I actually felt my heart skip a beat. Then it recovered to $183.67 by close. I was $817 above margin call. Less than $1,000 between me and liquidation of my $604,000 position. That night, Reddit's CEO gave an interview to CNBC. I watched it live, desperately hoping for something that might stabilize the stock. The interviewer asked about the engagement decline. The CEO acknowledged adjustment challenges with the new algorithm, but insisted they were committed to the changes and confident in long-term value creation. The stock dropped 4% in after-hours trading to $176.73. I was below margin call. I sat in my dark living room, watching my portfolio value update in real time. $581,253.97, down $308,743.65. At 10:47 p.m., I got an automated email from E-Trade. Margin call. Notice. Your account has fallen below maintenance requirements. You must deposit funds or reduce your position by market open tomorrow, or we will liquidate assets to bring your account into compliance. This was it. The moment I'd been dreading. In 12 hours, if I didn't act, ETRADE would automatically sell my entire position. I'd lose everything. I should have placed a sell order immediately. I should have controlled the liquidation myself, maybe using limit orders to get better prices. Instead, I spent the entire night on r/Wall Street bets, reading posts from other people in similar situations, looking for any reason to believe the stock might bounce before market open. It didn't bounce. It fell. October 5th, 2025, 9:30 a.m. The market opened. Reddit was at $174.26. E-Trade's automated systems began liquidating my position. Because it was a forced liquidation, they had to sell at whatever price they could get. They dumped all 3,289 shares over the course of 47 minutes, getting an average sale price of $173.18. Final proceeds: $569,529.02. Total loss: $320,468.60. But it was worse than that. Because I'd used a $325,000 home equity line of credit, I still owed the bank $325,000, and I only had $569,529 in proceeds. After paying back the HELOC, $244,529.02 remaining. I'd started with $889,997.62. I ended with $244,529.02. I'd lost $645,468.60, 72% of my investment, in 18 days. But the nightmare wasn't over. I still owed taxes on the 401k withdrawal I'd made in September. The IRS wanted $57,000 in penalties and taxes. My condo's regular mortgage payment was $2,100 per month, and I'd missed September and October payments. I had credit card debt of $18,000 from living expenses while unemployed. After paying the IRS and bringing my mortgage current, $182,729.02 remaining. And I had no income. I'd quit Amazon for my sabbatical. I'd burned through my emergency fund. I had no job prospects because I'd spent the last month obsessively monitoring a stock position instead of maintaining my career. I sat on my living room floor on October 5, 2025, at 10:17 a.m., looking at my ETRADE account showing $0 in positions and $569,529.02 in cash, and felt something inside me break. I'd destroyed 3 years of career advancement. I'd destroyed my relationship with Sarah. I'd destroyed my financial security. I'd destroyed my future. And for what? Because I'd been so convinced I was smarter than the market. Because I'd been so arrogant about my ability to analyze data that I'd ignored every warning sign. Because I'd confused intelligence with wisdom and confidence with correctness. Over the next 11 days, I watched Reddit continue to fall. $170, $165, $158. By October 16, 2025, Reddit was trading at $198.97, still falling, still dying, still destroying anyone who'd believed in the platform. If I'd held my position, I'd have $654,363.33 right now. Still a massive loss, but not catastrophic. But I didn't get to hold. I got margin called and liquidated at the worst possible price. I tried to return to work. I reached out to my old manager at Amazon. She was sympathetic but clear. I'd quit without notice during a critical project. They couldn't take me back. I applied to other tech companies. Most didn't respond. The few who did asked about my employment gap. Personal projects, I said, which was technically true if personal projects meant gambling away my life savings. By late October, I was burning through my remaining cash at an alarming rate. Mortgage, utilities, food, debt payments, it all added up. I had about 8 months of expenses left before I'd be completely broke. On November 3, 2025, I made the only decision I could. I listed my condo for sale. The market was decent, and I got an offer within 2 weeks. After paying off the remaining mortgage, the HELOC balance, and closing costs, I netted $187,000. Combined with what I had left from the stock sale, I had about $340,000 in liquid cash. This was supposed to be enough to restart my life. find a new job, rent an apartment, rebuild slowly. But something had broken in me. Some combination of shame, depression, and financial trauma that made it impossible to function normally. I couldn't focus on job applications. I couldn't sleep. I couldn't stop obsessively checking Reddit's stock price, watching it fluctuate between $195 and $205, torturing myself with what-ifs. What if I'd sold on September 22nd when the engagement concerns first appeared? What if I'd never cashed out my 401k? What if I'd listened to Sarah? What if I'd been less arrogant about my analytical abilities? By December 2025, I'd spent $52,000 on basic living expenses while unemployed. I was down to $288,000. I was 37 years old, unemployed, single, and living in a short-term rental with no prospects and diminishing capital. The depression got worse. I stopped applying for jobs in December. I stopped leaving the apartment. I stopped answering calls from my brother. I just sat in my rental, watching my bank account slowly decline, unable to summon the energy to save myself. Reddit's stock recovered slightly by late December 2025, trading around $215. The platform had rolled back some of the algorithm changes after the disastrous earnings call on October 14th. Engagement was stabilizing. Users were cautiously optimistic. None of it mattered to me. I'd already been liquidated. The recovery came too late. On January 8, 2026, I got a letter from the IRS. I'd miscalculated my tax obligation. Because of how the 401k withdrawal and stock sale timing worked, I actually owed an additional $31,000 in taxes beyond what I'd already paid. I was down to $236,000 in cash. No income, no job prospects. A growing hole in my resume that was going to be impossible to explain. Debt to the IRS I couldn't pay. I'm writing this in February 2026, sitting in a studio apartment in Tacoma that costs $1,400 per month. I moved here because Seattle was too expensive. I have $201,000 left. At my current burn rate, $4,800 per month including rent, food, utilities, IRS payment plan, I have about 3.5 years before I'm completely broke. I'm 37 years old. I was making $340,000 per year. I was worth over $1 million. I was a senior data scientist at one of the most prestigious tech companies in the world. Now I'm unemployed, clinically depressed, and watching my savings evaporate while I try to figure out how to function again. Reddit's stock closed yesterday at $221.40. If I'd held my position through the liquidation, I'd have $727,713.60 right now. Not a complete loss. Enough to rebuild with. But I didn't get that chance because I'd borrowed against my position and gotten margin called at the absolute worst time. My total financial damage. Investment loss. $645,468.60. Condo sale loss. Equity disappeared. Approximately $90,000. Career opportunity cost. $500,000 plus over the next 5 years. Current net worth. $201,000. Was $1,070,000. Current employment. None. Current prospects. Bleak. I made every classic mistake. Concentrated position, borrowed money, ignored warnings, held through a crash, got margin called. I was smart enough to identify the AI data licensing thesis, but too arrogant to consider I might be wrong about platform risk. The algorithm I was so confident would drive engagement did the opposite. The user base I thought was sticky proved willing to leave. The recovery I assumed would come happened only after I'd been forced out. And the worst part, the part that keeps me awake at 3 a.m., is that I did this to myself. Nobody forced me to cash out my 401k. Nobody made me take out a home equity loan. Nobody put a gun to my head and said, bet everything on Reddit stock. I did that. I made those choices. And now I'm paying the price while Reddit's executives collect their bonuses and Wall Street moves on to the next hot stock. Reddit didn't destroy me. The algorithm didn't destroy me. The margin call didn't destroy me. I destroyed myself by believing I was too smart to fail.